In this video we are going to talk about 10 great dividend stocks. So before starting this video, please like this video and subscribe to this channel for our future updates. Even though their dividend yields appear to be mediocre at first glance, the finest dividend stocks, companies that increase their payouts on a consistent basis decade after decade, can generate higher total returns, price plus dividends, over the long term. For starters, consistent dividend increases boost the yield on an investor's original cost basis, which is beneficial. Continue to invest for an extended period of time, and that modest 1% income on your first investment may one day grow to reach double digits. Number 10. Expeditors International of Washington. Expeditors International of Washington, EXPD, was added to the aristocrats in January 2020, bringing the total number of consecutive annual dividend increases to 27. The logistics company last increased its semi-annual dividend in May 2021, increasing it to 58 cents a share from 52 cents a share, which was the previous increase. In recent years, the transportation firm has experienced a period of hardship. During the last presidential administration, trade disputes between the United States and China had a significant negative impact on EXPD. COVID-19, on the other hand, has caused significant disruptions in air freight tonnage volumes as well as ocean container shipments. Number 9. Realty Income. Realty Income is a REIT that investors can rely on for consistent income, but it also has another feature to it that may appeal to some income investors: it is a dividend payer. Realty Income is a rare breed of a monthly dividend stock that pays out dividends every month. Currently, the company owns more than 6,700 commercial real estate buildings, which are leased out to more than 630 tenants, including Walgreens, WBA, 7-Eleven, KR FedEx, FDX, and Dollar General, DG, who operate in 58 industries and are represented by the company's stock. Because of the long-term nature of its leases, Realty Income is able to create predictable cash flow in most cases. Since 1994, the company has produced compound yearly dividend growth of 4.3% on an annualized basis. Number 8. Brown & Amp, Brown. Despite the fact that Brown & Amp, Brown, BRO, which provides insurance brokerage services to both corporations and consumers, has been in existence since 1939, the company's stock was not included in the S&Amp Wink with Tongue Sticking Out 500 index until 2021. For long-term dividend growth investors, the inclusion of BRO in the primary benchmark for United States equities performance also provided an opportunity to gain exposure to the dividend aristocrats. With its nearly three-decade history of yearly dividend increases, Brown & Amp, Brown was elevated to the exclusive club of equities income stalwarts in 2022. A 10.8% rise in BRO's quarterly payout to 10.25 cents per share was announced in October 2021, making it the company's most recent hike to date. Number 7. Essex Property Trust. Essex Property Trust, ESS, which was admitted to the dividend aristocrats in 2020, is a real estate investment trust, REIT, that invests in apartments mostly on the West Coast. The company has increased its dividend every year for the past 29 years. Since its initial public offering in 1994, the REIT has increased its dividend payout by a factor of 2. The most recent rise occurred in February 2022, when ESS increased the quarterly dividend by 5.3% to $2.20 per share, marking the company's 8th consecutive increase. Essex has achieved an annualized 10-year dividend growth rate of 101%, mostly as a result of its consistent and generous stream of dividend increases. With an annualized dividend growth rate of approximately 200% over the past 20 years, the company has outperformed the market. Number 6. Albemarle. The stock of Albemarle, ALB, which makes specialty chemicals such as lithium, has increased its dividend every year for the past 29 years. The most recent rise was in February 2022, when the dividend was increased by 1.3% to 39.5 cents per share quarterly. Despite the fact that Albemarle's products operate fully in the background, its chemicals are used in a variety of industries, ranging from clean fuel technologies to pharmaceuticals to fire safety. Lithium, on the other hand, is at the center of the bull case. In the words of CFRA research, the favorable outlook on electric vehicle adoption is ALB's major driver, and we believe there is additional upside risk for this trend to accelerate under a blue wave in the United States. Number 5. West Pharmaceutical Services. Yearly dividend increases for almost 3 decades. 29 West Pharmaceutical Services, WST, was inducted into the Dividend Aristocrats in January 2021 in recognition of its nearly 3-decade-long streak of annual dividend increases. When it comes to injectable pharmaceuticals and other medical items, WST is a vital component of the healthcare supply chain, manufacturing packaging components and delivery systems. In addition, bulls point out that the demand for COVID-19 vaccinations is increasing demand for the company's products. Meanwhile, the biopharmaceutical industry's substantial pipeline should be able to support longer-term expansion. The company last increased its dividend in October 2021, resulting in a 5.9% increase in the quarterly payout, which brought it to 18 cents a share. The presence of significant free cash flow and a low payout ratio should provide comfort to shareholders that yearly dividend hikes will continue. Number 4. Chubb. Chubb CB has increased its dividend every year for the past 29 years. Chubb CB was named to the Dividend Aristocrats in January 2019. The insurance company's payout was last increased in February 2022, when it increased by 3.8% to 83 cents a share per quarter. Chubb achieved its 29th straight year of dividend growth as a result of this decision. Chubb, the world's largest publicly listed property and casualty insurance firm, has operations in 54 countries and territories, making it the largest in the world. Despite the fact that it is not the most interesting topic for dinner conversation, it is a thriving business that has paid a dividend for decades. In addition, Chubb's consistent dividend increases build up over time in a significant way. Indeed, the insurer has achieved an annualized dividend growth rate of 134% over the past 20 years. Number 3. A.O. Smith. As a maker of commercial and residential water heaters, A.O. Smith, AOS, is a relatively new member of the Dividend Aristocrats, having joined the club in 2018. In October 2021, the company announced a 7.7% increase in its quarterly dividend, bringing it to 28 cents per share. The industrial company increased its dividend for the 29th year in a row, marking a record. As a result, the compound annual growth rate of AOS dividend over the past 5 years has increased to more than 17%. Meanwhile, the annualized dividend growth rate over the past 5 years has reached 158%. Number 2. Linde. Linde, LIN, was named a Dividend Aristocrat in late 2018 following the completion of its merger with Praxair, which was itself named to the illustrious list of the S&P Wink with tongue sticking out 500's finest dividend stocks for income growth in January 2018. Linde is a global manufacturer of industrial products. As a result of the $90 billion mergers of Linde and Praxair, the world's largest industrial gaseous corporation was formed. Before the merger, Praxair had grown its dividend for 25 consecutive years, and the merged business has maintained its dividend-paying consistency since then. Linde, which is now headquartered in Dublin, had increased its dividend every year since 2014, before the acquisition. Linde's most recent increase occurred in February 2022, when the company increased its quarterly dividend by 10%, bringing it to $1.17 per share. In addition, the business authorized a fresh share repurchase program worth $10 billion. Number 1. Ecolab. Water treatment and other industrial-scale maintenance services are provided by Ecolab, ECL, to a variety of industries, including food and beverage processing, healthcare, and oil and gas extraction. In the real world, its products aid in the optimization of everything from offshore oil production to electronics polishing to commercial laundries, among other things. Ecolab's fortunes, on the other hand, can fade as industrial needs shift. For example, when energy businesses cut spending, ECL will suffer the consequences. Over the long term, however, the shares of this dividend aristocrat have shown to be a profitable investment. For the past 5, 10, and 15 years, the stock has provided total returns that have outperformed the market. This is due in large part to the fact that the company has increased dividends for 30 straight years. ECL's most recent increase occurred in December 2021, when the quarterly dividend was increased by 6%, bringing it to 51 cents per share. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.